Gene, good morning to you. And I got to say, this is an interesting point. We've got a market that's in real rally mode, despite the fact that a company like Alphabet has provided such a disappointment. Were you as disappointed in those Alphabet earnings as the street seems to be?
I was, and ultimately is that these big tech names have the flywheel of an install base. In Google's case, you have a couple billion people use it every day. You'd expect that this sharp decline in revenue growth, you hit it right on. Last quarter, they grew their ad revenue, which is 83% of the overall business, at 22%. In the December quarter, that decelerated to 16%. Analysts were expecting that to be 18% growth. And so even though that seems small, as analysts adjust their models for the next several quarters, that impact obviously is compounding. And instead of having, let's call it a 15 to 20% growing story, you have a 13 to 16% growing. And that impacts how I think people should look at this. If you step back and think about the FANG results, and Google put that in the context, is really Facebook and Google, the two ad plays, were faced with some headwinds. So in some respects, well, I was surprised. Maybe we should have seen some of the writing on the wall after the Facebook results earlier in the quarter.
So Gene, let's talk about whether or not, I'm trying to figure chicken or egg here. Do we glean something about the overall health of the ad market based upon Facebook and Alphabet results? Or do Alphabet and Facebook results tell us something about what's going to happen with the macro market for advertising revenues?
I think it's more the latter. I think that this is a better indication of the macro market. Ultimately, these are the two bellwethers. If you are an advertiser and you want to get reach, you have to really spend on Google or Facebook. And so I think that what they're seeing in their ad business is more representative of what's going on in the overall advertising market. I'm not a believer in Facebook. I don't think Facebook necessarily puts the world in a better place. But the more I've studied what advertisers need in terms of reach and targetability, I think that there is no other place to go. And so I do think that these are bellwethers relative to the overall ad spend market. Before my comments maybe are taken out of context, I think it's important that even though these are decelerations and it is a disappointment, it still is healthy growth. We're still talking about mid-teens growth in the case of Google and higher for Facebook. So big picture, it's a deceleration, but I think the overall ad market remains healthy.
Tesla, a huge focus here, just a few moments left here. Can you take us through what you feel about these? I mean, it's just, I can't even describe it. I don't know what's happening here.
I can't either, Tom. I've been covering stocks for a long time, and this is really unprecedented. I think at the end of the day, what we're seeing is a shift from people viewing this as a car company, using Ford and General Motors as comps, as quickly thinking about this as a tech company. I just want to put some quick perspective on where this could go with Tesla. Is that their real business is a computer on wheels. It's a combination of hardware and software, similar to what Apple is, a combination of hardware, software, and services. If you apply a 20% growth rate on Tesla for the next few years and give a similar revenue multiple as Apple, that equates to $360 billion market cap. The current market cap of Tesla is $140 billion. In other words, I agree with you. I'm glued to the screen yesterday watching the movement in Tesla stock. But the reality is that if they're successful at capitalizing this undeniable truth about electrification and autonomy, the stock has much higher to go.